Today, in today's lesson, we are going to discuss this sale of non-current assets. Okay, sale of non-current assets. Normally, um, all the assets have the lifespan. I mean, useful life. For example, if you take a motor vehicle from the date of purchase, you may assess its useful life, maybe 5 years or 10 years. If that is the case, you will first assess the useful life. Okay, useful life. Second, what is the depreciation rate, right? Rate of depreciation. Depreciation. Third, you will assess the scrap value at the time of end of the useful life, right? Scrap value. Right, then useful life and rate of depreciation, scrap value. Okay, when asset, non-current assets, this is for non-current non-current assets, non-current assets, right? So because useful life means the non-current assets won't have a useful type of lifetime usage. It won't have a lifetime usage. There is a specific time period of usage. Okay, for vehicles, it may be 10 to 20 years or 5 to 10 years. It depends on your usage. Okay, land and building. Land won't have a scrap value. Land value of land always increases. So land and building has a depreciation value because building useful time of land will decrease. Okay, so other than the land, all the non-current assets, okay, other than the land, all the non-current assets have a useful life, means lifespan. Okay, and other than land, we used to make a depreciation for all the non-current assets. At the time of sale of non-current assets, we sometimes gain a loss or profit. We might get a loss or we might incur a loss or profit. The at the time, for an example, vehicle, we are selling that vehicle, right? The outcome of that transaction may be profit or loss, right? In the course of sale of non-current assets, we don't define the income as profit, right? Income or loss, income or revenue, come or revenue. What are the accounts which are relevant to this particular transaction, right? One is particular non-current asset account, non-current asset account. Number two is cash account, cash account. Number three is depreciation account. depreciation account. Can you understand? And number four is very, very much important is a disposal account. These four accounts are involved. Depreciation in the sense accumulated depreciation, okay? Accumulated depreciation. Non-current asset account, cash account, accumulated depreciation account, and disposal account. These four accounts are involved at the time of sale of non-current assets. Right. So from the sales we generate profit or loss. That is the accounts relevant to that is non-current asset, cash account, accumulated depreciation account, disposal account. Okay. So accounting treatment for sale of non-current asset is first of all with the cost of goods sold. First of all, we have to eliminate the cost from the non-current assets. Cost of the asset. We have to remove the cost of the assets from the non-current assets and transfer it to the disposal account. Right? For the disposal account, we will transfer. So if you want to always the asset account will have always a debit balance. So you have to remove that from the non-current asset, the portion which is relevant to the sale portion. So that amount you have to credit it for the asset account and debit it to disposal account. Okay, disposal account debited, non-current asset is credited, right? With cost of goods sold, cost of the goods sold, cost of the non-current asset sold. Okay, cost of the non-current asset sold. Second entry, we had to remove the depreciation part which is included in the accumulated depreciation account, right? That also we have to remove. This also we have to remove and we have to transfer it to disposal account. Okay, disposal account. So accumulated depreciation always will have a credit account because it is an liability, current liability. So we will credit it to, debit it to accumulated depreciation and debit it to disposal account. Understood? This is the main second rule. Third one is you are going to account it for the cash received. Cash account debit, here cash account coming in debit and disposal account credit. Okay, disposal account credit, cash account debit, disposal account credit. That is with the proceeds of sale. With the proceeds of sale. Here with the account accumulated depreciation of the assets sold. So these three accounting entries only involves in this particular transaction. So let us move with the exercise. Okay. Vimal has year end 30th June each year, right? Vimal has a year end of 30th June each year. His financial period always ends on 30th June each year. That means 1st of July his financial year is starting and ending at subsequent year 30th June each year. On 1st January 2022, he purchased a car for 50,000. On 1st January 2022, he purchased a car for 50,000. The car expected life of 5 years, right? First, you had to non-current asset, okay? Non-current asset. Vimal ending on the 30th. 1st of January. 1st January 2022. Purchased car. Car, that is non-current assets. Car. You are purchasing a car. What is the value? Cost. Cost is 50,000. Okay. Cost is 50,000. The car has an expected life of 5 years. What is the expected life? Expected life. Expected life is 5 years. 5 years, okay? 5 years. With an estimated scrap value 1000. Scrap value is 1000 rupees. Okay. Vimal Vimal's depreciation policy is to use straight line depreciation. Depreciation policy depreciation policy is straight line method. Straight line method. Okay. The policy is to use straight line depreciation. Vimal sells the car on 30th September 2024. Sales takes place when? This is a straight line method means you have to calculate the depreciation. Means 50,000 divided 5 and 10,000 each year is the depreciation charged to accumulated depreciation account. Yes. Yes, we will move to the next one. Bimal sells the car on 30th September 2024. He sells on 30th September of 24. Okay. For value is 6,500. 6,500. What is the requirement? All ledger accounts and P&L and balance sheet. You are required to prepare all the profit and loss account and balance sheet. Okay. So, what are the accounts we have to open? We have to open a car account, car, debit, credit, car account, right? Here, accumulated depreciation account, depreciation, and disposal account, disposal account, and cash account. This one we say cash account, and here we can say disposal account. Here we can say cash account. Because we have a limited space within which we have to calculate, do the our calculations. Okay. Normally, the purchase date on first 2022. Cash, we have paid 50,000. Car account debited. Cash account credited. 1 1 22. Car 50,000 credited. Right. And first year the depreciation is June 30th June 22. Okay. Depreciation, accumulated depreciation account debit, accumulated depreciation credit. We can open a depreciation account. Debit 10,000, accumulated depreciation account. This is on 22, year of 22. Accumulated depreciation 30th 6 22. Depreciation account 10,000. Right. That is depreciation 5 years. The cost is 50,000. Usage life is 5 years. Scrap value is 1,000. Right. Depreciation straight line method. It is going to be, we say 51,000. Okay. 51,000. Right. Cost is 51,000. Say cost is 51,000. 51,000 because the calculation will be easy for us. Okay, 51,000. Now the sales take place in the year of 2022. The purchases take place on year of 22. Sales take place on 30th September 24. Right. So 23rd we have up to year of 23rd we have prepared, and 22nd we have prepared. We have to prepare the 22 23rd PNL. No, carried down 10,000, brought forward 10,000. Right. Here PNL we are transferring to 10,000, closing the entries. And on year of 23rd, accumulated depreciation is 10,000. Okay, so here we will say on 30th of 6th, 23rd, depreciation account 10,000. So balance it 20,000. This goes to 20,000. Carry down balance 20,000. On 1st of July 24th, brought forward 20,000. Okay, brought forward 1st of July, July 1st. Okay, 2024. July 1st, 24, the brought forward balance is 20,000. Here it goes to P&L, profit and loss account 10,000. Halas, finished. This is carried down balance is 51,000. On 1st of July 22nd, carried down value brought forward. Brought forward value is 51,000. Carried down value also 51,000. In 1st July 23rd, the brought forward value is 51,000. Okay, so this is okay, this is okay. Okay, so we have balanced the car account up to 1st of July 23rd, sorry, 23rd and 24th. Carried down values 51,000 and 1st of July 24 brought forward is 51,000, right? This is 22nd up to July 22nd, the depreciation is 10,000, right? 1st of July 22nd brought forward is 10,000. 30th July 23rd depreciation is 10,000. 1st of July 23rd depreciation is brought for 20,000 and this is June. This is June, right? This is June 23rd, 24th. Accumulated depreciation account, debit 10,000 and 30th 6th 24, right? The 30th 24 is 10,000 and this is 30,000 brought forward, carried down 1st 30th 6th 24, carried down 30,000. Here on 1st of July 24 brought forward is 30,000, right? We have made the calculation up to July 24th. We assume the during the year of purchases we used to provide the depreciation. During the period of sales the depreciation is not carried out. We do not make depreciation during the year in which the sales of the non-current assets takes place. Put your assumption there if you don't get the sufficient information in your question. That is important for you. Okay. So first year financial year ends on 30th of 30th June 30th June 22nd, then 30th June 23rd, and 30th June 24. 3 years. 3 years we have used this particular week. Here cash account just we are moving, we don't need to balance it. Okay. Main account is car accumulated depreciation and disposal. Depreciation and cash is just for your understanding I am putting, otherwise you can balance it. Don't no not needed to balance the cash account. Okay. And dispose the sales take place on 30th of September 24, right? So we are going to transfer the balances available in the car account, right? Disposal account 51,000. Here disposal account when 30th of 9 24. Disposal means car account is 50,000, 51,000, sorry. So this is balancing, finished, car account is closed. Now we had to, second step is we had to remove the accumulated depreciation from its account. Accumulated depreciation disposal account. On debit 30,000, disposal account credited 30,000. Accumulated depreciation, right? So we have removed. Here it is debit and credit balances. So we have closed the depreciation account. This is goes to P&L. This is closed, this is closed, this is also closed. Now we are receiving the cash of 6,500 on the sales of car. Cash account debit, disposal of car 51,000, and disposal account is credited to 6,500. Okay, 6,500, and this cash account, we say cash account 6,500. We are selling at the price of 6,500. Okay, understood. So we made an entry for disposals also. Cash account debit when we are selling the car is going out, asset is decreasing, then it is credited. So car account, disposal account is credited. Cash is coming in, current assets, increasing the cash, the cash account is debited. Okay. Now we have completed the whole entries. Now we have to balance it. Okay. So here disposal account, greater side is 51,000, right? 51,000. The balancing amount 14,500. This goes to profit and loss account, right? Profit and loss account debited. This is the credit. Balance means creditor. Disposal account. We incurred a loss of 14,500 because cost is 51,000. We made a depreciation for 30,000. Cash received on disposal is 6,500, whereas 36,500, 51,000 minus 36,500 is 14,500. That is the loss incurred. This is the loss. Loss on sale of asset. Loss on loss on sale of assets. It is car. We incurred a loss. So have you understood how do we make the entries? Okay, we know when the cost of goods are sold, disposal account debited, asset account credited. Asset account credited. We have made it. Here credited, here debited. With the accumulated depreciation of the assets, accumulated depreciation account debit, here we have debited. Disposal account credited. Here we have credited 30,000. Cash account debit and disposal account credit with the proceeds of sales. Once we get the proceeds of sales, cash account debited and disposal account credited. Completed the question. Now the requirement is P&L and profit and loss. Profit and loss account and balance sheet. Whereas in the balance sheet, statement of balance sheet. Okay. Under the non-current assets, right? Say car balance will be shown as a nil because we have sold it. Nil balance. In the statement of profit and loss account, loss revenue income will be there. Revenue, other revenue, other revenue, right? Less expenses, admin and those things, right? may other expenses, under the other expenses, not in the other expenses, yes, we can say other expenses or distribution expenses, selling and distribution expenses, loss on disposal of car, 14,000, 14,000 other expenses or under the selling and distribution expenses, we can show this 14,500 loss, we have to deduct it from the revenue. This is how we used to show in the financial statements. Okay, understood. Next we can see revaluation of non-current assets, right? In next chapter is revaluation of non-current assets is the next lesson. I will meet you in revaluation of non-current assets.